Hi everyone, welcome back to satokoworld Finance Academy. So today's lesson, we're going to learn about RRSP, that is Registered Retirement Savings Account. So this only applies to Canadian viewers, but for American viewers, it is equivalent to IRA. So, but in the future, I'll try to create the IRA videos, but today's lesson that only applies to Canadian viewers. So let's get the lesson started. On our last lesson, we learned about TFSA. Do you remember? That's a tax-free savings account. So as I said, it is tax-free. So whatever the gain you have in the TFSA account, it is tax-free. You don't have to pay any tax on the gain. Okay. Now RRSP is tax-deferred. So do you know the difference? Tax-free and tax-deferred. Deferred meaning you have to pay tax later on, not now, but later on. So tax must be paid when you withdraw money from the RRSP account. Okay, and if you watch my last video, you know that I'm a fan of TFSA. Anytime I don't have to pay tax, I'm happy. But RRSP, I want you to be careful before you're putting money into RRSP, because it's harder to take money out of RRSP if you ever needed the money. So I want you to have the right knowledge, and then I want you to utilize RRSP in a right way. Okay, so there is a deadline for the RRSP, and which is December 31st. So TFSA, it was January 1st to December 31st, right? But RRSP, the deadline to contribute for the past year is the first 60 days of the new year. You can contribute for the past year. So this year, 2023, the deadline to contribute for the 2022 is March 1st. And the year that we have February 29, the deadline is actually on February 29. Okay, but this year, it's on March 1st. And then now, there is a limit to how much you can contribute with TFSA, right? So this year is $6,500. And for RRSP, there is a limit as well. So now, how much can I contribute to RRSP? So this is how we calculate. So 18% of earned income in the previous year, but there is a limit, and that's $30,780 in 2023. So $30,780 is this year, 2023, but normally every year it goes up. So whichever the less you contribute, that's how much you can contribute. And the available, contribution room is going to be carried over. So if you don't use up, it carries over every year. And that's same as TFSA, right? And now, how can I find out my available contribution room? So it's actually many ways to find out, but I'll just give you 2 quick ways for you guys to find out. So first, notice of assessment. There is a RRSP available room, section, so you can see that. Or you can go to CRA website, that's Canada Revenue Account, CRA website, and go to my account and you log in, you put your information, and you can see the available contribution room. Okay, and then now, as I said, most of the people should utilize TFSA before start using the RRSP, but there are some people and some cases that you should utilize RRSP, mostly to reduce taxes that you must have to pay, okay? So who should contribute to RRSP? So those people who have a higher income and you have to pay tax on yearly, filing on the tax, those people should utilize RRSP to reduce the tax that you have to pay, okay? So those are the people who should utilize it. And also, when you receive one lump sum income, you might want to use the RRSP to reduce paying the tax. So let's say if you had investment property and you sold it, now you have one lump sum income. So of course, if that was investment property, you have to pay the capital, half of the capital gain as a tax. Well, in your marginal tax, right? So that case, you might want to put whatever the available room of the RRSP, you might want to put into RRSP to reduce the tax that you might have to pay, all right? So that's another people situations. And also, if employer matches the contribution, you should utilize it. So anytime I get free money from the employers, I take it, right? So yeah, if the employers matches a contribution, definitely take advantage of it. But be careful not to put too much in it, because there's always the maximum the employers matches. So up till the maximum percentage the employers matches, okay? So no more than the maximum that they matches, all right? Now, age limit to have RSP. So pretty much anyone can open an account at any age, 71 years and younger. So even 10 years old, legally they could open an account. However, majority of the financial institutions wouldn't let children open the account until like 18 or 19, the age of majority. So, but legally they could open it. And so 71 and then younger, I said, right? Because RSP, you must withdraw by December 31st of the year you turn 71 years old. So after that, you can't have RSP, okay? So you must withdraw it by 71, or December 31st of the year you turn 71 years old. So how does that work? Now, I'm gonna reveal my age here, if you can calculate. So this is my birthday, November 5th, 76. So in 2047, I don't even want to think about it, I'll be turning 71 years old. So I would have to withdraw money from an RSP by November 5th, 2047. So that's how it works, okay? Now, about withdrawing money from RSP, there is a penalty. We call it withdrawing tax. This is a big reason why I want you to be careful putting money with RSP, because it's not cheap. So withdrawing tax up to $5,000, it's a 10%, and in Quebec it's 5%. So this withdrawing tax, what they do is they take money automatically before they give money to you. Yeah, so if that's $5,000, automatically they're gonna take $500, and then you only receive $4,500. And $5,000 to $15,000, they take 20%. In Quebec, it's 10%. And then more than $15,000, they take 30%. And in Quebec, it's 15%. And on top of it, if your marginal tax is higher than this withdrawing tax, they're gonna take additional tax from you. So this is huge, right? And once you withdraw, you can't replace. So you're gonna lose the contribution room, okay? So that's the withdrawing tax. And there are a few ways that you could kinda avoid paying withdrawing tax, and then you can still have access to the your RSP. So the first way is the home buyers plan. We call it HBP, and this only applies to the first time home owners. So if you're buying a house and you have money sitting in the RSP and you want to use the money for down payment, and you can withdraw up to $35,000 without penalty, which is the withdrawing tax, but you have to repay within 15 years. Okay, so that was a home buyer's plan. Or the second way is a lifelong learning plan. We call it LLP. And you can withdraw $10,000 a year, and maximum $20,000. So you could do, $20,000 over 2 years, but you have to repay within 10 years. So that's the second way. And a third way, you could buy annuity with the money in the RRSP. So in a very, very short description, annuity is a long-term contract with an insurance company. And so what they do is, the insurance company takes the money from you and then they invest, and then you receive the regular payment from the insurance company, whatever that term may be, 10 years, 20, 30, it could be for life, so that's annuity. And to be honest, I'm not a fan of annuity, and I'll explain in the future, okay? And then the fourth way, to transfer to RRIF. And by now, you're probably thinking, WTF, right? In the financial industry, there are so many acronyms. But RRIF is Registered Retirement Income Fund. So this is another whole different lesson to explain this RRIF. But to make it very, very short, RRSP was a vehicle to save money for retirement. So this RRIF is now the vehicle for you to spend money after the retirement. So that's the short description. And once you transfer to RRIF, you must start receiving money from the account. So the money is going to be less than less. Okay. So, but one good thing about this is a no withdrawing tax. So, but you still have to pay the marginal tax, but they're not going to deduct the money like, withdrawing tax. And you must start withdrawing by December 31st of the year. You're turning 72 years old. So ideally, this is what it should happen, considering your health is good and everything is good. So the year that you're turning 71 years old, you can transfer the money from RRSP to RRIF, and then you can start withdrawing money the year you turn 72 years old, and then you receive it. That's the ideal situation, but of course everybody's situation is different. It could be your health, or it could be the financial situation and all that. So, but this was a quick description of the RRIF. Okay, so today's lesson was RRSP, and it was very quick overview of RRSP. There are more to it, but it was just an overview of it, and I hope you understood how this RRSP works, and you can hopefully utilize this in a right way. But again, my favorite tool is still TFSA. All right. So I'll see you guys on our next lesson, and thank you for watching. If you want to work with me and expedite your financial health, please email me at satokoworld@outlook.com. So let's start wealthy and let's get wealthier, everyone. I'll see you guys on our next lesson. Bye.